Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario where we're still expecting a move towards the downside in a WXY, with Y being a three-wave structure to the downside. Now this wave X is very important, as also almost the invalidation has been hit at 31.4k, because inside this wave X we'd be looking for a three-wave structure in an expanding flat ABC, where the most common target for a wave C is in between the two 1.618s. And as you can see at the beginning, the two 1.618s were very nicely respected over here, especially the upper one of course, but then candles started to close above the 1.618, lowering the probability of this particular scenario. Now also, if we look towards the downside, another reason why this scenario has a lower probability is because the target area for a wave Y is in the same price action as we already had before. Yes, we do have a support area over here and we have a couple of small ones over here, but it's not really nice and it doesn't make sense for price to go down to the same area for then another bounce, finishing a big corrective structure on the higher time frame for then a big impulsive move towards the upside. So therefore this scenario is an alternative as it stands. Now, because online I do see sometimes this scenario popping up, I like to talk about it in an expanding flat ABC. So instead of a WXY, we now have an ABC 335 wave structure. However, the most common target for wave B is all the way up here between the 1.236 and the 1.38, pulled from the high to the low of wave A in confluence with the 2022 range highs, which is very nice. But the problem is that if we have to look for a three-wave structure in this wave B, and this is then the three-wave structure we're going to be looking for, then you can clearly see that the target area most commonly for a wave B is far above the target area for a wave C and then an ABC, which would kind of invalidate this scenario. A rare target for a wave C is the 2.618 over here, sitting at 32k, but still it is a rare target for a reason, and the most common target for a wave B is still higher than this rare target for a wave C. Instead, looking at this bullish scenario, this is the one that at the moment looks the most likely, with then a WXY corrective structure to the downside that is finished for then a move to the upside in a wave 1, looking for a corrective structure in a wave 2. If we then zoom into this wave 2, the most common targets for a wave 2 from a Fibonacci standpoint are between the 0.5 and the 0.786 fib, taken from the low to the high of wave 1. Clearly, you can see that price is not even close to hitting the 0.5, also not even close to hitting the rare target, which is the 382. No, it hit the very rare target, which is a 0.236. It is a rare target because you only really see that in very explosive bullish or bearish trends, but as it stands now, price has bounced on top of the 0.236, and in this scenario, you're expecting a wave 2 and then eventually a bigger 3 towards the upside. If we zoom into this scenario in particular, you can see I have now a 5-wave count to the upside over here, where this wave 2 also bounced on the 0.236. And remember, it is a very rare target, so that is quite astonishing for then this wave 2 also bouncing on the 0.236. That's twice in a row in this scenario. Now what you see is this wave 2, the green one, below the wick that we made on top of the 0.236. Now there's two potential scenarios for this wave 2. Either wave 2 is already in, bouncing on the 0.236 in between the 0.618 and the 1-to-1 fib time, taken from the low to the high of wave 1 as well, to compare the time it took to develop 1 with the time it took to develop wave 2. So time-wise, this is a nice target for a wave 2, in between the 618 and the 1-to-1. It's just that retracement-wise, the 0.236 is very rare and not preferred. So either time is good, but we have a very low retracement, or this wave 2 is going to move to the right, and then you have a longer correction sideways. So the time is a bit worse, as then you expect this wave 2 to end beyond the 1.618 most likely, which is on Thursday the 6th, 6 p.m. Central East European time. But the retracement might be a bit better, as you're going to go to the 382 and maybe the 0.5, but the 382 probably at least, because we also have a target area over there on the linear scale around the 29k area for support, for then potentially a long setup. But nonetheless, the 382 is still a rare target. So yes, you do have a longer correction, you do go down a little bit more, but you go from a very rare target to a rare target. So as it stands, potentially the low of 2 might be in, and we're currently working on a bigger move towards the upside. If we go to the micro bullish scenario, We jump to the 1 hour time frame over here. Actually, let's go to the 30-minute and let's look at what we had, right? I have a leading diagonal on the chart after we had a 3-wave corrective structure in a WXY to the downside. You now in a bullish scenario want to see a impulsive move to the upside. So this is the low of a corrective structure hitting the 236, and now you'd be looking for a move up. You want to see volume moving up, you want to see price moving up, and in this scenario the move up could be a leading diagonal. The leading diagonal is then a wave 1, which is a 5-wave impulsive structure in a 1, corrective sideways 2 for then a 3, corrective 4, and then eventually looking for another move to the upside in a wave 5 that is also going to take the double top that price has created at 31.4k with this high and then the lower high that we made with this wave 3 over here. Looking at this particular diagonal, the retracement of wave 2 hit the rare target, which is a 0.382 for a wave 2 in a leading diagonal. This wave 3 reached the common target for a wave 3 in a leading diagonal, which is between the 786 and the 886, pulled from the low to the high of 1 to the low of wave 2. So this is actually very nice. Then we look for a wave 4 retracement, where the common targets for a wave 4 are between the 0.382 and the 0.5 Fibonacci, with a rare target being the golden pocket. But to be honest, if we're going to go down to the golden pocket, you know, the probabilities are changing to the bearish scenarios as well. So preferably price is going to stay above these levels, like the 0.5 sitting at 30.8k basically, for then a move towards the upside in a wave 5. It also has to be said that the price action that we have over here is ranging around the 0.886 fib taken from the high to the low. And if price is hitting an 886 and then retraces, well, that's what you want to see for more bearish price action. But if price is going to range around this level over here, around the 886, and hangs around it basically, right, the probabilities increase for price to move towards the upside and take this high. So that is still something that I'm personally looking for. Now, if we look at the targets for wave 5 with the low that we have at the moment, let's see, I think I might have to, yeah, no, it's a good low. Then a minimum target, usually the common target also for wave 5 is a 0.618 sitting at 31.6k. The 0.5 is a rare target at 31.5k. And basically this wave 5 is invalidated the moment price is going to go above the 1-to-1, because this wave 5 is not allowed to be longer than this wave 3. It should be shorter waves. Wave 1 is the longest, then wave 3, and then wave 5. Wave 5 then being the shortest. So currently, with the low that price has made, the invalidation is at 32.1k. In the bearish scenario on the micro time frame, we'd be looking for another move towards the downside. So going to the 1 hour time frame, we have then a 3-wave structure over here in either a wave A or a wave W, followed then by a 3-wave corrective structure in a B or X, and then you want to look towards the downside in C or Y. Now, preferred at the moment is a WXY based on the price action that we have over here, but probabilities will change if price is going to take this high again, because honestly, this price action over here is starting to take a long time. Yes, a wave C tends to take a little bit longer than a wave A in time, which is the case, as you can see. But currently, price over here retraced too deep for this to be a wave 1, 2, 3, 4, 5. Therefore, this wave C cannot move to the right. It has to be here on the left, and I'll show you why this is not possible. It has to do with that wave 4, because if we take a fib from the low of 2 to the high of then wave 3, right, and we put it on the wave 4 targets, and I drag it to the right, so now what we're looking for is this, right? You want to see another 5 to the upside. The problem now is that this retracement went to the 0.618, which is a rare target for a wave 4. And usually when candles are closing below the 0.5, which usually also is a maximum target for a wave 4, you can kind of invalidate a wave 4. So that's also what I did by now counting it as a 1, 2, 3, 4, 5 to the upside, which then has to be the end of a wave C. What you can also see is that this wave C did not hit the 1 to the 1.236 target area for a zigzag, the most common target area for a zigzag, which is pulled from the low to the high of A to the low of wave B, which is a little bit odd, right? So we have a couple of things going on. So this wave C is actually a little bit too short. Preferably you would have liked it to end somewhere over here. What I'm basically saying is that if price is going to move towards the upside and takes the double top at 31.4k, so going above this high, the bullish probabilities are going to increase a lot. If price is going to, of course, move towards the downside, then we look for bearish, the bearish scenario, because this then is the high of this wave X in yellow. So we'll be looking for this to be the high of X, and then we're going to be looking for a move towards the downside, where then the 29k area is going to be interesting, right? But as it stands, price is still ranging. If we then look at the CVD divergences, actually a lot has been going on thinking about it. If we go to Discord and I scroll to the upside, then over here I have a picture, right, where you can see, and also you can read the text now that I wrote over here, but you can see that we had that initial bounce, price moved to the downside, and I'll show this on the live chart in a second. Price moved down, wicked this low, then moved to the upside, but while moving to the upside, price started to create bearish divergences, first on the yellow line and then on the blue line over here. So I wasn't really confident for price to move towards the upside. And if we go to the live chart and I jump to the 5-minute, it had to do with this initial bounce over here. So this wick low, which on the chart, if we go to that 5-minute, is this low over here. So price moved to the upside, right? And I was monitoring that. Price moving up, creating bearish CVD divergences, creating a lower high on price, more bearish CVD divergences on both lines, for then a move to the downside, and the low has been wicked once again, as you can see over here, for then potentially now continuation. Now, if we look at the CVD divergences, you can see now price moved up, moved down, big bullish divergences here on the yellow line, which is very, very interesting. Now price moved up once again, no bearish CVD divergences to be seen, and maybe if price is going to retrace a little bit deeper, the blue line over here might start to create some bullish CVD divergences as well. But we have to wait and see, as at the moment of recording, these are not yet there. So finally, the probability section then. What are the highest probability scenarios that I've just shown you in this video? First of all, on the medium time frame, the highest probability scenario at the moment is the bullish scenario. Of course, price can retrace a little bit deeper, but as it stands now, the most probable scenario on the medium time frame is this bullish scenario, with this then being a wave 1, mainly because in the bearish scenario, we're going above a wave C, ABC structure, right? And if we look at an even higher target, then over here, this target for B is way too high compared to this wave C. And even if you would put the low of A over here for whatever reason, and you're going to look for a 3-wave structure over here, then if this is an A, this is your B, then you'd be looking for a wave C that goes far beyond the wave B target, as the most common target for a wave C is between the 1 and the 1.236, which as it stands right now is above price, far above price at like 37k. So that doesn't make any sense. So on the medium time frame, the bullish scenario is preferred. Then on the low time frame, well, I only have this scenario, of course, where we'd be looking for that wave 2. And as I mentioned, it's like it's a trade-off. Either the time is good, but the retracement is very low, or we have a little bit of a worse amount of time, so it takes longer for this wave 2, but you have a bit of a better retracement, and as like this, the 0.382 is more common than a 236, and of course these are preferred, as these are the most common wave 2 targets, but that's still very, very deep compared to where price is at the moment, and we have a support area around 29k that it has to pass as a bare minimum. So preferably, it's very difficult to say if I would like this low or a lower low. It all depends on the micro scenarios, which then if we go to the micro scenarios, then my preferred scenario at the moment is, it's like almost 50-50, honestly. But if I have to choose one, I wrote bull, but I think I actually wrote that wrong, as I meant medium time frame says bull bear, but it had to be micro bull bear, and medium time frame bull. So that's a mistake on my part, because it depends on where price is going to move now. As I explained, currently we are in an area ranging over here that works for the bullish scenario and looking for 5, but it also works for the bearish scenario because you want to see downside. The thing is, if price is going to move towards this area over here around 30.6k, where we do have some support, by the way, with a naked point of control, 30.7k, 30.5k. If price is going to go down here, the probabilities increase for the bearish scenario, where we're going to potentially then see another low at 29.5k, right, or deeper, preferably around 29k. In the bearish scenario, that's what you want to see. The probabilities for the bullish scenario will increase if price is going to take this high and take the double top. And at the moment, based on what I mentioned with the 886 and the fact that price is ranging around the 886, which increases the probabilities for price eventually taking that high. Also, the bullish CVD divergences that we created all across this range with a higher lows in price but lower lows on the CVD. And now locally some bullish CVD divergences as well, bouncing on the 382. For me, the preferred scenario is probably price going towards that double top, as also a double top by itself is a magnet for price. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.